Welcome to the investment update for April. Today's Wednesday the 6th, and we've got a lot going on in the world. We've got geopolitics, war, we've got inflation raging, we've got markets down then up again. There's a lot going on, and there's a lot to figure out. So we want to give you a bit of an overview as to what's happened in the last quarter and our view for the quarter ahead and the year ahead. So this year we always thought that it would be one of challenges because central banks were pulling back and the stimulus coming from governments was coming back as well, although we've seen a bit of the federal budget relief with fuel excise, and that's particularly helpful. But overall, what are we seeing? So we're seeing the path of rate hikes from central banks on the way up, and that's coming earlier as well. The Reserve Bank met yesterday and they said that they were perhaps not as patient. That language was dropped from their statement. So markets are pricing in that they'll have a first rate hike in early as June. The Federal Reserve is going to be pretty critical as well, and later this week we have their minutes coming out. They had their first hike of 25 basis points at their last meeting, and at their next meeting they may well go further. They may well do 50 basis points, and the race is on really for them to try and harness and get inflation under control. Now, we think that both the Federal Reserve and the RBA are going to be pretty critical. The other aspect will be how the economy is rebounding. Now, we've had one of the most disruptive years ever. We've got the aftermath of COVID with the different variants and new Omicron variants coming through and an upswing of cases there. That's not really slowing down the economy so much. But it is affecting services, particularly in places like China where they do actually have a hard lockdown. What we're also seeing is unemployment down to record low levels, and the lowest that they've been in 40 years. So we should see wages start to come up from here. So what does that all mean for markets? Well, we're seeing Australia being quite well placed in this environment with higher inflation and things that have happened around the Ukraine war. So agriculture, iron ore, and other things like metals are quite well placed there. And we think that housing will be a little bit softer as we go through a period of high rates. That's already starting. So we think there'll be a real risk management focus this year because you've got a lot of drivers on the positive and the negative. It's critical how reporting season goes, particularly in the US, and the forward-looking guidance. We'll get some companies giving us a guidance on earnings. So we're starting to become a little concerned about valuations, but they're only a little stretched at the moment. And if we get positive earnings coming through, then actually that situation could be okay. So how to position for the months ahead? We think initially there's some momentum behind the current move, but that's in the very, very short term. So maybe only a month or two, could be a little bit longer. But we're seeing the slowing of the economy as inflation starts to bite and affect household balance sheets. So we think that further in the year might be appropriate to take some more risk off, but at the moment it's looking okay. Private markets are a good place to have some allocation. So if it's in private equity or private debt, either through some of the exposures that we have in the separately managed account that we have, or if you're a wholesale investor, directly through into some of the investments that we recommend there. So for the rest of the year, we think it's best to be cautious, take advantage of the opportunities both on the upside and the downside. There'll be some cheaper prices during the year, and there'll be some volatility. So with that in mind, we're taking a risk management focus, and we think that there'll be good positioning ahead. That's it for this month, and good luck with your portfolios.